Okay, the floor is yours.
So I guess I have 1 hour and 10 minutes. I'll promise to keep it short. I know it's dangerous to be the guy postponing the conference dinner, so I promise to stay within around 20 minutes. While we have seen so many interesting models and simulations for country-specific models, the purpose of this presentation is actually the opposite. We are not near doing any kind of modeling yet. We have just had a few meetings in the group, and what I'm presenting today is basically our initial thought about which way should we go. Our main idea is that our previous model has been way too simplistic. Now we try to increase it quite significantly in many different areas. Furthermore, we try to engage more with politicians, meaning that we need to move a bit away from academic models, be able to actually enable discussion with politicians in Copenhagen, which of course requires a much more detailed model than we have been working on previously. So that is the starting point of this presentation. No equations, no simulations, no TMF, no balance sheets. I'll show you a little data, but at a very aggregated level. So this is the agenda for the presentation. Short motivation. I've actually deleted a few slides since I'm the last presenter. I didn't want to extend this say. To allow you to engage in the discussion afterwards, I'll just give a brief status of the Danish economy yet. And finally, I'll try to open up some discussion about the model, how to extend that in different versions. The questions we like to engage you in today is these two. They might seem simple, but as we all know, it's quite challenging to answer them. The first one is, of course, we could change Denmark to each other country, but how do we build a model that actually is able to address the challenges faced by the Danish economy? And secondly, how can we at the same time try to contribute to the further development of this SFC environment? How can we add to the development of these models? So that is actually the question we hope to discuss with you in the end of this presentation. But before doing that, we need to show you a little bit about the current situation in Danish economy. If we look at that, then these numbers are from the central bank. The prediction are based on their quarterly macroeconometric model MONA, with this change in the short run. So these, I'm not going to discuss these numbers in detail, but they should be pretty close to what we would get if we try to forecast a model. If we look at the real GDP, you see that before it was quite high, but it moved back to the historical norm around 2%. What's more interesting actually is to look at the number of employment. Last year, we broke the record for the first time in history. More than 3 million in Denmark was employed. And as you can see, it actually month after month, we are breaking that record. And if we look at the projection, it's actually growing in the medium term as well. Moving to the number of unemployment, you see it's actually quite low. It stays below 90,000, and that drops numbers. So it means it's included all the people being activated due to the Danish security system, so the net numbers should be even lower. As it was mentioned previously in one of the other presentations, we don't find any significant link between unemployment and the growth in wages. So it means we have an issue in explaining how does changes in unemployment actually affect wages in them. We don't find any significant relationship, and we are not alone. It's a basic result among different Danish institutions. Moving to the current account, we see that it's more than plus 10%. So we are a bit in the same situation in Holland. But unlike other countries, we also face surplus on the public balance. Seems like Denmark, Norway, and I think it's Switzerland are the only country showing this double surplus incident. Private balance has moved beyond 10%. The last couple of years, it has actually been above 10%. Now it's a bit lower, but we move towards 10% again. It means it shows something about the strength of the domestic economy, and I'm going to show you the figures later. House prices increased like in Holland. We don't have a shortage of houses in Denmark, but especially in the big cities, Copenhagen, Aarhus, Aalborg, and Odense, we see a massive increase in house prices. So that's I'll show you later. CPI below the 2%. And finally, if you look at the development in wages, it exceeds the development in prices, meaning that the real wages in the This, of course, paints quite a, I would say, beautiful picture of the economy. And last week at a conference, the Ministry of Economy called, I'm not sure I can tell, but she called Denmark a winner economy and a loser weekend. I think many people disagree with that. And last, but at least it shows a very positive picture of the Danish economy. If we dig a little bit more into the data, focusing on the sectoral balances, if we look at the time after 2010, we can, on average, at least see that all four domestic sectors are actually in surplus. The last one, rest of the world, is moving even further into deficit. So again, it shows a picture of a very solid domestic economy. Looking at the net wealth, financial net wealth, the dotted line, while including fixed capital, gives the overall net wealth. There are a few interesting things. If we look at the household, you can see it actually keeps on increasing, and it's a quite high number, especially due to the pension wealth, as in Holland again, but also increasing house price. What's most interesting from a domestic perspective is this light blue line. Denmark has moved from being borrowing money abroad actually to increase their foreign wealth over the years, due, of course, to this massive current account. Focusing a little bit more on the domestic economy, starting looking at the population, we can see that if we look at the growth in population, which is the blue line, that's the total population, and the green line is net immigration. You can see almost perfect correlation between these two numbers, meaning that to keep the Danish economy growing, we really need to rely on net migration in the Danish economy. On the other side, you see the average wages in the Danish economy, and I think, like in most Western countries, the average wages have increased quite significantly the last decades. The inequality, you look at the GDP coefficient on the left, you can see it has increased. I know that it says 20, 25, and 30. Measured at a level, it's quite low. But if we look at the development measured in percentage increase, it's actually quite a rapid increase in inequality. On the right-hand side, we have the S8050 red line and the P90 on the green line. And again, both of these have increased over time. So the inequality in Denmark is definitely increasing the last couple of decades. And finally, looking at the asset prices, we can see the stock prices, 1995 index 100, and it has increased quite strongly over time. What's remarkable here is that 2025 was actually quite a bad year for the Danish stock market. This one is end of November, but actually, if we look at the first number of 2026, we are back again. On the right, we look at the development in houses and apartment revenue. 2030 index 100. And again, you can see there is quite a strong increase in houses. So it might be a bit difficult based on these numbers actually to identify some structural issues in the Danish economy. It seems to be quite solid. So if we try to first five to identify some challenges, we definitely need to look more into this aging population and inequality. But we cannot do that in the model we already have because we don't split up households as Mark showed us. So that's definitely an area we need to go more into. We have only 50, 60,000 unemployed people. So we do have a constraint on the labor. We have a quite large pension system, which raises two issues. The one raised by Johan and earlier, it leads to financialization. But more interesting also in Denmark is this aging population. Is that actually affecting the sustainability of the pension system as it is now and our welfare state? Finally, is that bubble on its way either on the housing market or stock market. So that's the 5 challenges we can identify based on the previous images. Furthermore, we have many other risks connected to or related to the climate changes. Denmark is quite low. You cannot be anywhere in Denmark where you are less than 50 kilometers from the coast. And we have 7,000 kilometers coastline in Denmark. So if the water is increasing or we have flood, Denmark would surely be put through both a physical risk, but also a financial risk. So that's definitely an issue we need to look more into. And of course, like Simon presented yesterday, there is so much related to the green transition, how to finance that, how to actually take care of that. And finally, especially also due to immigration, in Denmark, there has been quite a tight immigration policy the last couple of years. So we also need to be able to analyze changes in the law, also due to changes in Europe, which also highly affect the Danish society. So we are actually able to identify some challenges, but huge limitation in our previous work is that most of these issues we are actually not able to analyze them within an aggregated model. So we need somehow to disaggregate our previous models. So it leads to 2 research questions. How can we actually incorporate these challenges into our model? And secondly, can we actually do that within just one model, or do we need multiple models working along each other? So that is somehow one of the first questions we hope to receive some input on later. Then we move to the second part of the presentation, namely the models. And we have 2, of course, related questions. What is the purpose of the model as being discussed previously today, but also what should be the size of the model? Some of you recognize that title. That was from your presentation in Athens. Is small automatically beautiful? Of course, we can identify many advantages of having a small, flexible model, but we believe in this case that no, small is not beautiful in our situation, because we really need a very large, disaggregated, complex model. The cost of building that model, of course. Secondly, what should be the purpose of the model? Should that be a research-based or a fully fledged model? Previously, we have leaned much towards research-based, finding a issue and trying to build a model around that research issue. But now we are moving more in the other direction, say we want a really fully fledged model, and then waiting or looking for which issue is it meant to analyze. So it means we try to get a really large model, and then we'll identify the scenarios later. But of course, since we are trying to portray the Danish economy, we need to have some of the main characteristics in the model. It needs to be a small open economy, hopefully a little bit more complex than your model. But both export and import as a share of GDP the sum of it exceeds 100%. So it means Denmark really relies a lot on trades with the rest of the world. We have a bit a strange system because our currency is pegged to the euro, but it's floating towards the rest of the world. So it means having only one rest of the world as we have now, due to data limitation, is actually not enough to have to handle this strange exchange rate regime. So we need at minimum one EU with pegged exchange rate and rest of the world with floating exchange rate. But that requires more data. We have a large public sector, financed by collective taxes. As far as I know, the only country in Europe, we have what you can call a unit. That meaning we have 25% of all products. That's actually a hot potato in political debates in Denmark at the moment. Should that be differentiated or not? We have a healthy public finance, which means we are not working with constraints on the fiscal space. It's actually quite huge in Denmark. So we don't talk about unfinanced public expenditure or anything. They are already financed. And finally, of course, we have this labor constraints economy. And what can we do about it? The first thing is we need to move beyond the free available data with the last 10 years. So we have bought access to Adam. It's an old model in Denmark. It was built back in the 60s and 70s, but maintained by Statistics Center. Unfortunately, it's going to shut down now, but the main purpose was actually to recreate the national account, including sectoral account, including input-output tables. So they have a massive data bank. Now we have access to that. Unfortunately, they only have annual data. Second one, we have also bought some consultant hours at Statistics Denmark, allowing us to ask for the variable we want on a mixed frequency. So that's also opened up some. Finally, we have discussed the opportunity of using register data, meaning tax data. It would allow us to build some kind of an ABM model. And we also got access to some quite deep financial data. So it means, at least if we use these two types of data, we need to find a way to integrate these data into our national account framework. That leads to the second discussion, which kind of data should we use? And I guess in the end, it depends on which issue are we going to analyze. It's going to be long-term, like pension or demographic changes we want to analyze, then annual might be the best. If we are more trying to explain the business cycle and short to medium term issues, quarterly data might be the way to go. We have also discussed, but we haven't found any evidence of it in other models to mix these two kind of frequency in a model. Secondly, until now we have used discrete data, but there are forces in the group trying to convince us that we should make benefits of using continuous data instead. And as I think everyone saw Amit's presentation previously, we also debate should we use the standard econometric single equation estimation, or should we try to move to other types of solution or other types of econometric tools than we have used previously. Compared to our previous model, we have identified a huge number of weaknesses in these models, but at least 3 ways where we want to extend the model. First of all, our behavior on the financial side is really weak. We treat most of it as buffer or very simplistic behavior. We want in the next model to be much more explicit on the behavior on the financial side, hopefully supported by this new access to financial data. And yes, since that's one of the main advantages of using the stock flow consistent approach, this needs to be done. Secondly, either ADM or microfoundation, call it whatever you want, but we need to have a clear understanding of what's actually going on within these sectors, within the household sector, within the government sector, firm sector. So we need somehow disaggregation, where we should go completely down to which kind of disaggregation we're not sure about yet. And thirdly, we also need to discuss the role of expectation. How to integrate these expectations, should it be backward-looking, should it be forward-looking, or should it be some kind of a combination of some? We have a question, it could be backward-looking, but for other, it should definitely be more forward-looking than previously. So, now close to the end, we have also to discuss how to actually do this. And one of the things we are considering now is to have a main model looking a bit like the one we already have, and then have a lot of sub-models around it we can activate and deactivate regarding or related to the issue we want to look more into. Of course, this is work which we are not able to do the next year, so it's a long or medium-term project we are working on here. So at the moment, it might be a solution to start with a more aggregated model like the one we know, and then start working on some of the sub-models around it. We have already seen some work on the input-output table, meaning disaggregate the production sector. We know all that working with input-output in real time is one thing, but working on the financial account is a much bigger issue. Labor market, as it was identified earlier today, there are a number of demographic variables available. We need to have different cohorts of labor analyzed in the model. Financial markets, I think it speaks for itself. Household, as Mark showed, different income group, for instance. How does that actually affect the analysis we are making? Same with government. Now it's quite simple, but especially in a large public sector as it is, it's important to more disaggregated government sector with much more, for instance, tax rates than we have now. And finally, due to the different currencies, need to disaggregate the rest of the world instead of just treating it as one. A solution to that could be to have actually an explicit model of the rest of the world. So finally, to repeat the question put earlier, how are we actually going to build a model that addresses this issue faced by the Danish economy, and how to actually contribute to the development of these empirical models in general? That's my presentation. Thank you. And I forgot to start the time. So.
Thank you. I want the discussion will be based on your presentation.
Yeah, I didn't submit any paper.
Interesting. The presentation of what's happening in the Danish economy is very interesting. You didn't mention Greenland, which is the
yeah, but they have their own national account. So from an economic perspective, it's not a part of Denmark.
Yes. One of the questions is how to extend the model or to take different models. Now, for one of the topics you mentioned, the topic related to climate change and the possibility of water, the ocean water rising, I guess that the impact of the Danish economy on these processes is minimal. So I don't think it makes any sense to have a model where the overall ocean temperature interacts with the Danish economy, because the impact will be from the environment to the economy, and the other effects is there, but it, I guess, is very small. And this would simplify. So this would be how do you say, a parallel small model that you can attach to your existing model to study the possible impact of the environment. And the other issues are also related to things that have been discussed. So the aging of population, the impact of migration, and these can, I think, be addressed with an extension of your existing model with a more detailed description of the labor market and of the different interactions of the labor market with production, and also with the pension system and government finances. So from this point of view, it may be useful to have different household groups, since these would also help address the other problem you mentioned, the possibility of a bubble in the stock market and in the housing market, which is usually correlated to the income concentration. So having different household groups by income deciles may help address these other problems. Then I also agree with that having two rest of the world groups, so the European Union, where the exchange rate is pegged, and the all other countries where the exchange rate is flexible, may be useful. And this should not be too complicated from the trade side, maybe it's more complicated from the financial side. I don't know how, which type of assets is Denmark purchasing from abroad, and who is purchasing the Danish bonds. But all this should not be too complicated, but as an extension to your existing model rather than a side model. And then micro foundations, I don't believe in micro foundations, but there was a presentation in this workshop on developments in the agent-based model based on the data. Sounded extremely interesting, although it sounded also to require a huge amount of work.
Yeah.
So I want to think about it. And finally, the financial side of the model. I'm not sure that dedicating a lot of resources to this would be beneficial to the main questions you want to address. Maybe it will be useful for the bubble, understanding whether there is a bubble and how the bubble is behaving. But this also gives you a lot of headaches because financial markets behave mainly on the basis of speculation. And this would require, I guess, a type of agent-based model. But I think that if you address successfully any of the items on this list, this would be a great contribution to the overall FXC community. Thank you.
Thank you for the. Should I comment briefly, or should I give any comments? Or
Yeah.
Yeah.
Small question for clarification also to Ginaro's remarks. I didn't understand that fully. For Danish coin to the euro, then you automatically also drag it or you fix it to the euro dollar change rate. Because otherwise you have arbitrage also with the detailing not doing that. So why then what's the difficulty there? I didn't get that point.
But the euro comes back to the dollar.
No, but if you back your Danish krone to the euro, then you have to follow the euro dollar change rate. Well, otherwise you have arbitrage. Otherwise you can just trade between if there's a difference between the Danish krone and the euro. No, if that's fixed, it would be different.
The exchange rate changes on the country, so there is no effect of the exchange rate for the trade with other Euro countries. So the effect is only the account is outside the overdraft. So splitting the two may be useful.
Yeah, in terms of the rate, yes, not in terms of the exchange rate.
So,
Oh, no, but it's more to have that's,
Exchange rate.
yeah. But you're right, all right. And related to the risk of higher water, you're right. We have only seen at the one causality that from climate to higher insurance and housing, lower house prices. That's the way we have seen it at the moment. But you're definitely right.
this will stop the recording.
Yeah.